Hey, real quick, let me ask you something. Did you know that millions of Americans are doing everything right saving for retirement every single year, but because they picked the wrong account, they're walking away with $100,000 to $200,000 less by the time they retire? That's not a small mistake. That's a life-changing mistake, one wrong choice. Hundreds of thousands of dollars just gone, and the worst part, most people don't even realize it until it's too late. Today I'm going to break down the real difference between a Roth IRA and a traditional IRA. No fluff, no confusing financial jargon, just straight-up clarity. I'll show you exactly which one is right for your situation. And at the end of this video I'll give you a simple 3-question test that will tell you the answer in under 60 seconds. So please stick around till the end. This one could literally be worth 6 figures to you, alright. Let's start from the top. What even is an IRA? IRA stands for Individual Retirement Account. Think of it like a special bucket, a container where you put your money. That money gets invested in stocks, ETFs, or index funds, and the government actually rewards you with a tax advantage for doing it. Now, both the Roth and the traditional IRA are versions of this same bucket. Both let your money grow. Both have a 2026 contribution limit of $7,000 per year. And if you're 50 or older, that bumps up to $8,000. But here's where everything changes. Here's the one big difference between the two, and honestly this is everything. It all comes down to when you get your tax break. With a traditional IRA, you don't pay taxes on the money going in. The money you invest today goes in pre-tax. It lowers your taxable income this year. But when you retire and start pulling that money out, you'll owe taxes on every single dollar you withdraw. With a Roth IRA, it's the complete opposite. You put money in after paying taxes. No tax break today, nothing up front. But 30 or 40 years from now, when you retire and start withdrawing, that entire amount, all of that growth included, comes out completely tax-free. Let me make this crystal clear with a real example. Let's say you earn $60,000 a year. If you put $6,000 into a traditional IRA, the IRS only taxes you on $54,000 this year. You save a little money right now. Feels good, right? But if you put that same $6,000 into a Roth IRA, the IRS still taxes you on the full $60,000. No discount, nothing today. So why on earth would anyone choose the Roth? Here's why, and this is where it gets exciting. Imagine you're 25 years old. You put $6,000 into a Roth IRA today. Over 35 years, at a 7% average annual return, that $6,000 quietly grows into around $80,000, and when you go to pull that $80,000 out in retirement, $0 in taxes. Not a single cent. But with a traditional IRA, that same $80,000 withdrawal could cost you $16,000 to $20,000 in taxes, depending on your bracket. That's the power of tax-free growth. And once you see it, you can't unsee it. Now let's talk pros and cons, starting with the Roth IRA. The biggest advantages: your money grows completely tax-free. Your withdrawals in retirement are tax-free. There are no required minimum distributions, meaning the government will never force you to take money out. And here's one most people don't even know: the money you contributed, not the growth, just your original contributions, can be pulled out at any time with zero penalty. So it's not just a retirement account. It's also a quiet little emergency backup. The downsides: you get no tax deduction this year. And if your income is over $161,000 as a single filer, or $240,000 if you're married filing jointly, you can't directly contribute to a Roth IRA. Now for the traditional IRA, the main advantage is simple: you get a tax break right now. Your taxable income drops this year. If you're currently in a high tax bracket and need to reduce your tax bill today, this is a big deal. The downsides: at age 73, the government requires you to start taking money out every year whether you want to or not. These are called required minimum distributions, or RMDs. You'll owe taxes on every dollar you pull out. And if you withdraw before age 59 and a half, you're hit with both a penalty and taxes on top of that. So who should choose which one? Here's the honest truth. It really comes down to one question: is your tax rate higher right now, or will it be higher when you retire? Choose the Roth IRA if you're between 20 and 35 years old, if your income is relatively low right now but you expect it to grow, if you want a completely tax-free retirement with no surprises, or if you want to leave tax-free wealth behind for your kids or family. Choose the traditional IRA if you're in your peak earning years right now in a high tax bracket today, but expect your income and your tax rate to drop significantly once you retire. And here's something most people completely miss: you don't have to pick just one. You can actually split your contributions between both a Roth and a traditional IRA, as long as your total stays within that $7,000 annual limit. Okay, now the 3-question test I promised you. This is going to make the whole decision simple. Ready? Question 1: am I currently in a low tax bracket? If yes, go Roth. Question 2: do I expect my income to increase significantly over the next 10 to 20 years? If yes, go Roth. Question 3: do I want to pay absolutely zero taxes on my retirement withdrawals? If yes, Roth is absolutely the move. If you answered yes to most of those, Roth IRA, no debate. But if you're currently earning a high income and you need to reduce your tax burden this year, traditional IRA might be the smarter play for right now. So here's the bottom line: for most younger Americans, the Roth IRA is the better long-term choice. Tax-free retirement is an incredibly powerful advantage, but your personal situation matters. Use that 3-question test. Make the decision that fits your life, not someone else's. If this video helped things click for you, go ahead and subscribe and stay with us. Every single week on this channel, we break down personal finance topics just like this one, the stuff that actually moves the needle in your real life. And drop a comment below, are you going Roth or traditional? I read every single comment. I genuinely want to know where you're at.